The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by LevelTradingField.com, the online communication, research, and quantitative platform with the largest collection of financial tools for traders, including the innovative Bitcoin Market Predictor. The Bitcoin Market Predictor is a simple prediction game where 10 people place bets on the future price of Bitcoin, and the top 3 most accurate predictions wins. Sign up at LevelTradingField.com with promo code INSIDER. The Options News Rundown is also brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning, traders. This is your Options News Rundown for Monday, February 26th. Our first story today comes from NASDAQ. Are options traders betting on a big move in Sprint? Investors in Sprint Corp need to pay close attention to the stock based on moves in the options market lately. That's because the March 2nd $6 put had some of the highest implied volatility of all equity options so far today. Clearly, options traders are pricing in a big move for Sprint, but what's the fundamental picture for the company? Currently, Sprint is a Zacks, rank number 3, or a hold in the wireless and national industry that ranks in the bottom 20% of the Zacks industry rank. Over the last 60 days, 4 analysts have increased their earnings estimate for the current quarter, while 8 have dropped their estimates. The net effect has taken the Zacks consensus estimate for the current quarter from a loss of 2 cents per share to a loss of 3 cents in that period. Given how analysts feel about Sprint right now, this huge implied volatility could mean that there's a trade developing. Oftentimes, options traders look for options with high levels of implied volatility to sell premium. At expiration, the hope that these traders say is that the underlying stock doesn't move as much as originally expected. Our next story is from Bloomberg. General Electric plunged again as investors spurned Chief Executive Officer John Flaherty's latest charm offensive. The CEO's letter to shareholders in a broad overhaul announced on Monday failed to soothe concerns about liabilities on GE's balance sheet, which the company detailed in its annual report after the markets closed on Feb 23. In the latest political hurdle, GE warned its risks with penalties as the U.S. Department of Justice continues an investigation of the company's defunct subprime mortgage lender. GE is subject of an accounting inquiry by the SEC, which ordered it disclosed last month shortly after taking a $6.2 billion charge related to an old insurance portfolio. In his letter to shareholders, Flannery acknowledged a, quote, very tough year in 2017, but he insisted that GE is rethinking its structure, cutting costs, and enhancing management accountability. It also followed through with a pledge to overhaul its board with the nomination of an accounting expert and 2 former industrial CEOs. GE also has said that it has plans to focus on energy, aviation, and healthcare as it sheds divisions such as transportation and lighting. This stance has generated widespread interest, including from Warren Buffett. In an interview with CNBC, the billionaire investor both criticized GE's accounting missteps and said that he wouldn't rule out an acquisition of assets depending on what GE is ready to sell. Our last story today comes from CNBC. A further big rise in the 10-year Treasury yield later this year would lead to a dramatic decline in the stock market, according to Goldman Sachs. While our base case looks for a gradual rate in the 10-year to 3.25% by year-end, the next stress test, the outlook for a larger increase to 4.5%. That's according to Dan Struvian in a note to clients from Goldman Sachs. Raise in rates to 4.5% by year-end would cause a 20 to 25% decline in equity prices. Struvian said that such a sudden increase in bond yields would cause a sharp downturn but no recession. He estimates that the higher interest rates in a scenario would detract 0.5% percentage points of GDP growth from the U.S. economy this year and lower growth by 1 percentage point next year. A sharp move in higher rates to those levels is not the firm's base prediction, but the analysis is useful for investors to keep in mind if rates continue to rise higher than Wall Street and Goldman currently expect. That's all we have for today. You can find all of these stories and more at theoptionsinsider.com. I'll be back tomorrow with more options news you can use.
The Options News Rundown is brought to you by LevelTradingField.com, the online communication, research, and quantitative platform with the largest collection of financial tools for traders, including the innovative Bitcoin Market Predictor. The Bitcoin Market Predictor is a simple prediction game where 10 people place bets on the future price of Bitcoin, and the top 3 most accurate predictions wins. Sign up at LevelTradingField.com with promo code INSIDER. The Options News Rundown is also brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.